Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Dr. Sadek Wahba, chairman and managing partner at I2 Capital and former economist at the World Bank, as well as Jessica Wollmuth, America's climate change and sustainability deputy leader at AI. They join us to discuss the impact of infrastructure on the economy and why climate resilient infrastructure is so important and why it's going to continue to increasingly be important. Sadek and Jessica, it's great to have you with us. Welcome to Trade Talks. And Sadek, we'll kick it off first with you. Explain to us the impact on infrastructure in the economy. It's not just as simple as the outset, the cost of a project.
First of all, thank you very much for having us on the panel. You're absolutely right. Infrastructure has a huge and significant impact on economic growth, and not just economic growth, but employment. A dollar spent or invested in infrastructure has a very large multiplier effect on economic growth, has a very large impact on unemployment and job creation, and at the end of the day, increases American productivity, which is critical over the coming decade. And so when you combine all of these, you have to ask yourself, where can we put that extra dollar in infrastructure? How can we be efficient about it? And you can see it in the numbers. Since the infrastructure bill that was passed 2 years ago by President Biden, $1.2 trillion, you've had unemployment at about 3.8. That's almost 200 basis points less than the historical average unemployment of 5.7% since 1948.
Right. And Barbara, to Sadek's point, these are good jobs. These are well-paying jobs, which continue to contribute to the economy in a number of ways.
You're right. I mean, infrastructure is so important for the jobs that it creates, but also for what it does for society, that it moves, it moves our goods, it makes our businesses work. It, it really allows the economy to run.
Right. And Jessica, why do you think climate resilient infrastructure is going to increasingly be important?
Yeah, to answer that, maybe I'll back up and just talk about what climate resilient infrastructure means. And also that gets lumped into green infrastructure. So climate resilient infrastructure is infrastructure that we build both at a business level, but also in our public spaces that is more immune to the impacts from climate change. So think of things like sea level rise and wanting to have New York and Miami and New Orleans better protected from sea level rise so we don't have disasters that happen when floods occur. Or you can think about burying power lines so that when we have wildfires, that those power lines are more resilient to those events and then allows electricity to keep flowing to our houses. When we think about it from a business perspective, we're thinking about, what are you doing to think about making your supply chains resilient? So when there's really cold weather events in Texas, that you're able to still run your business because maybe you have alternative supply chains to draw on. So all of that is kind of a big bucket of climate resilient infrastructure. And there's lots of decisions to be made, both at a business level and at an economy or a government level on how we decide which of those we should be investing in.
Right. And Sadek, let's isolate a specific instance here. More recently, the recent Baltimore bridge collapse and partial road erosion of Route 1 in California. What do these events tell us about the impact of infrastructure to the economy?
Listen, at the end of the day, it's sending us a very clear red alert. We have to invest in our infrastructure. And exactly as I was just talking about now, which is we have to make it more resilient. Of course, green is another component of it. But in terms of resiliency, we can't afford to have a piece of a road or a piece of a bridge that collapses. That's not possible. And what the infrastructure bill has done is just brought the investment level to the basic needs that we need. Remember, the United States in the last 4 decades, so since the 1970s, has invested 2% of its GDP in infrastructure. An economy like China, since the 1980s, has invested 8% into GDP. So now when we have that impact of climate on our infrastructure, exactly what we're talking about, rising sea levels, erosion, impact on our basic infrastructure from extreme heat or extreme cold, we need to be invested in those type of infrastructure just to be able to address that. Because the consequence, if we don't, is hundreds of billions of dollars of losses, which in fact negates what we would have been doing in terms of the reinvestment in infrastructure.
What are some of the complex challenges that exist specifically with climate resilience?
One of the things I can mention is this, just that it's a hyper-local challenge. So you can think about, as we talk about these events, that what we saw in California with erosion, that, that happens because of sea level rise and storm events that occur along the coast. So that requires one answer to that problem. When we're thinking about extreme heat in Texas, that's quite a different answer. So it's complex because you have to understand, how does climate change actually impact on a local scale? And then what are the responses to that?
Right.
Yeah.
And we'll get to the, I'm sorry, go ahead, Steph.
No, I was going to say, Jessica is absolutely right. It's at the end of the day local. And what you want to do is to be able to take that local information and see whether you're able to develop a pattern and the kind of mitigation that you need to do on our infrastructure. And that, I think, is extremely important.
Right. And we'll get to energy in just a moment here. But Sadek, you and I have covered this before. Are we doing the right things when it comes to infrastructure to protect the economy? Is the private sector taking lead? Is the public sector taking lead? Is it a combination of the two?
Look, it's a great question. To date, most of the investments outside of the energy sector, for a second, when you think of traditional infrastructure, roads, bridges, and so on, has really been taken care of by municipalities, states, and the federal government. In fact, the $1.2 trillion that the president passed on a bipartisan basis is basically taxpayers, all of us paying for that. Is that possible? Can we continue to do that over the coming decades, given the amount of investment that we need to do, the kinds of things that Jessica talked about? The simple answer is no. We cannot continue to do that. So you either look at increasing forever our budget deficits, or you look at increasing user fees, or you look at increasing the involvement of private sector into infrastructure investments. And at the end of the day, the answer is going to be all of the above. But right now, private capital is not really investing in what I would call traditional infrastructure. And we need to encourage more of that, especially when it comes to AI-based technology.
Right. Well, and
Yeah, and I totally agree with that. And one of the things that might help us in really motivating that business investment is some of the new legislations that's proposed through the SEC and in California that really requires more transparency around what climate risk businesses are exposed to. And so as companies get more transparent on those climate risks that they're exposed to, that will then ideally prompt more investment by those businesses, or want to partner with the public sector to encourage more resilient infrastructure.
Right. And Sadek, to your point earlier, in terms of private needing to take the lead and needing to invest, I mean, back to the budget and the deficit, we can't even service the entitlements that need to be serviced right now. I think to even, put new projects into the budget right now, it's just not serviceable or sustainable. So it's almost, the private sector has to participate if we're able to move forward with this, which brings me to what I want to hear next is the role of energy, because these are energy intensive projects, particularly when you start to bring AI into the conversation. I mean, these require a lot of energy. So we need that infrastructure and the power grids to be able to support the projects to build infrastructure. It's almost like the chicken before the egg thing here.
Yes, and I think Jessica brought a very good example. You want to have resilient infrastructure. You need to be able to bury the transmission distribution system that we have underground. That will cost you tens of billions of dollars. But it's not just a question of burying them in the ground to avoid the disasters that can come from hurricanes or weather changes, but it's also because you need to invest in the transmission distribution network, because AI that we need will require massive amount of data centers, which itself will require huge amount of power. That power cannot be, first of all, it needs to be generated. And then second thing is it needs to be transmitted through lines. And that will require tens of billions of dollars to invest to be able to satisfy that, so that we can use the AI in the development of AI-based technologies that help us develop resilient infrastructure. So it's a full circle in a way.
That's right. And adding to that full circle, AI, cloud computing, all of that takes lots more energy, just like you said, Dr. Wahba. And we don't want to do that in a way that exacerbates the climate problem, meaning we need to generate that electricity to support that infrastructure in a renewable way. And that then requires investment as well. And so lots to think about and lots to work on as we improve our climate resiliency.
Yeah. Well, Jessica, let's talk about AI for a moment and its role in infrastructure. What are some, what's the promise within that context, and what are some of the potential risks that you see with AI?
Yeah, I mean, there's great promise for sure. I mean, the promise is that one, that problem about how do you localize climate modeling and how do you predict where you are going to have significant climate events can be really enhanced by AI. It's a huge data problem. How do you localize those climate models to understand where you're going to have impacts? So that's a big benefit. The second benefit is it's a big optimization problem. So do we pick making sea level walls higher versus burying those electric lines versus the 10 other things that we might do to make our infrastructure more resilient? We can't do it all. So how do we pick the best things? And I think AI can really help there. The downside is what we've been talking about, is that it's very energy intensive, and some thoughts that it'll take more energy to run AI than it does to power all the EV cars that we have. And so we've more and more things as we move to a lower carbon economy that requires energy, and how do we make sure we do that in a lower energy intensive way?
I'd like to add a point to that. When we talk about it's local, that's extremely important, and that's the challenge when it comes to AI as it applies to infrastructure and climate resiliency. What do I mean by that? You need a huge amount of data, but at the end of the day, if you're talking about a particular issue, say in Florida, it's really very specific to Florida. And so the challenge that, say, civil engineers have is to be able to collect enough data so that you're able to create a pattern that allows you to be able to then figure out how can you make buildings, how can you make roads, how can you make infrastructure in general more resilient. Two things. Number one, we need the funds to be able to go into these kinds of research. National Science Foundation has created groups like NERI, Natural Hazards Engineering Research Infrastructure, that does exactly that. So that's an important element. But then the second question is, once you have that in place, what do you do with that information? Because more resilient infrastructure means a higher cost. And so you go back to the fundamental question of who's going to pay for it.
Right. Well, Sadek, we can't ignore the fact that we are in what's going to be a contentious election cycle, right? And the word climate is a very partisan issue, right? Whether you call it global warming, climate change, climate risk, climate tech, it is a partisan issue. We can't ignore that fact. What happens if Trump secures a second presidency, and what happens if Biden is able to, hold on to his role?
So I think there's two parts really to the question, I would say. The first is, does anything happen to the IRA bill? Generally, the answer is going to be no, independent of who is the next president. That's because it's already been legislated, funds that have already been allocated, and of course, tax credits are not retroactive, and so there it's in place. They may not get renewed in the coming years, but that's a separate issue, which it applies to any administration. So I don't think that will impact the impact on the existing infrastructure projects is going to be de minimis. I'd say another thing, interestingly, the projects through the infrastructure bill in the IRA has really benefited more red states than blue states. So I think there's a general consensus that irrespective of what drives climate change, that there is climate change, and that we have to address our infrastructure, right? So that's there. And the investment that's going to happen, I don't think will be impacted. Now, what you do next, I think, is an important question. I think if it's the President Biden who gets a second term, I think you're going to get a continuation of the existing infrastructure bill, and you're going to get to infrastructure 2.0. If President Trump is elected to next year, then I think there may be a chance or a risk that they do not put infrastructure as a key element of their plan because they have other priorities. Although I have to say that both Republicans and Democrats for the last 30, 40 years have been asking for investment infrastructure. The problem is once you succeed, do you continue or do you ignore it for another 20, 30 years and come back to it when we have another crisis?
Yeah.
And Dr. Wahba, maybe I'll add go back to our point about the role of business and how important that is, kind of regardless of the politics of it, that, fundamentally, climate risk is business risk, and that demand for being able to protect business assets, supply chains, what helps business run is going to be my hope is apolitical, and then generate that funding and that investment for infrastructure.
Yeah, I mean, that's a great point that you bring up, Jessica, and as well, Sadek, that everyone's benefit because it is a big driver of the economy. There's jobs to be had, they're well-paying jobs. But Jessica, to your point, especially if you're a public company, you do have to report to the SEC. It really is, businesses provide jobs, and clearly, there has to be some sort of agreement there that, if you are in an area where there's high climate risk, you're unable to mitigate it, and then, you start to have operational issues. That changes,
Totally, yeah.
That changes the calculus.
Absolutely.
Yeah, it sure does.
In Texas, there was a massive cold spell and the power generation system failed. But it's the same thing happened in what we call the PJM area in the Northeast, where there was a massive cold spell and the system failed. So in a way, climate doesn't say, well, I'll go to a red state or I'll go to a blue state. It's completely agnostic, and I think both type of states recognize that you must be able to invest to avoid that kind of disaster, because the consequences end up being much, much more expensive than the cure.
Jessica, is the labor force skilled up enough to be able to support these types of jobs and projects?
Great question. I think fundamentally the work to do those projects is similar to what other kind of engineering construction jobs are. So it's a matter of how high do you make infrastructure? How deep do you bury things? So the work itself is not different. Do we need more and more skills in that area? Definitely. So it's I think our pace of how fast we deliver that infrastructure is going to, in large part, be defined by how fast we can upskill folks to do that work.
I appreciate the insight. Thank you so much for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Okay. Thanks, Jill.